A Hill, understanding Trump's potential executive order on retirement funds and private equity. Warning, your retirement savings might be about to get a risky makeover. Imagine your hard-earned retirement funds invested in the same high-stakes, high-rewards game as billionaire investors. This could soon become a reality if President Trump's proposed executive order goes into effect, opening the floodgates for private equity investments in 401k and individual retirement accounts, IRAs. The current landscape, safe but limited. Typically, defined contribution retirement plans, such as 401ks and IRAs, play it safe with publicly traded stocks and bonds. In contrast, private equity firms usually cater to deep-pocketed institutional investors and the ultra-wealthy. Trump's plan would bridge this gap, introducing riskier investments to the average retiree's portfolio. The allure of private equity: higher returns, higher risks. Private equity often outperforms public equity in terms of returns, but at a cost. These investments are less liquid, making it challenging for investors to withdraw their money quickly. Moreover, private equity firms frequently use borrowed funds to leverage transactions, a strategy that can amplify both gains and losses. Industry experts weigh in, caution and controversy. We need innovative strategies to boost portfolio performance, emphasized BlackRock CEO Larry Fink, highlighting the potential of private assets like real estate and infrastructure. However, Axel Merck, president of Merck Investments, cautioned against the regulatory complexities and political sensitivities that come with such a move. It's a minefield for 401k managers, he warned. The private equity sector, ailing but influential, despite signs of distress, including a 2% contraction in assets managed by buyout firms from 2023 to 2024. The first decline in decades. Private equity wields significant influence in Washington. The sector has historically secured favorable treatment, notably the carried interest tax loophole valued at around $1 trillion. Fear of the unknown: will Main Street investors get burned? Critics worry that by opening private equity to retirement funds, institutional investors and the wealthy will exit the potentially overvalued market just as less sophisticated investors enter. With the Secure 2.0 law already bolstering defined contribution plans, and the private equity sector grappling with decreased IPO activity and increased investor pullouts, the timing of this proposal raises eyebrows. Your turn, share your thoughts. Do you think introducing private equity investments to retirement funds is a savvy move or a recipe for disaster? Should the government prioritize deregulation in the financial sector, even if it means increased risk for average investors? How do you envision the future of retirement savings evolving in response to these potential changes? Sources: The Wall Street Journal, www.wsj.com/finance2/open up 401ks to private markets C90C788. Sources: The Wall Street Journal, wsj.com/finance-investing-Trump executive order to help open up 401ks to private market C90C688. www.bain.com/insights outlook is a recovery starting to take shape. Global Private Equity Report 2025. The Hill. thehill.com/policy/finance 60004M/Congress gives IRA perks to high earners/tax bill. Why private credit is a smart choice for your 401k. Imagine this. Your retirement savings, nestled safely in a 401k, could be diversified with private credit investments. Centerbridge Partners, a prominent player in the financial world, has boldly stepped into this arena, suggesting that private credit has a legitimate role to play in 401k portfolios. But here's where it gets controversial. Centerbridge Partners, along with many other alternative investment managers, sees tapping into 401k portfolios, retirement funds as a natural progression for private credit firms. Jeff Aronson, the co-founder and managing principal of Centerbridge, made this assertion on Wednesday, emphasizing that private credit can be a secure investment for 401k participants. The key, he says, is for investors to have a clear understanding of what they are investing in. Centerbridge, headquartered in New York, manages a substantial $42 billion in assets as of March 31st. The firm launched its private credit strategy back in 2007, demonstrating a long-standing commitment to this investment approach. And this is the part most people miss. Private credit, often seen as a niche investment, involves lending to companies that may not have access to traditional bank loans. This can include small to medium-sized businesses, startups, or even larger corporations looking for flexible financing options. By including private credit in 401k plans, investors could potentially benefit from higher yields compared to traditional fixed-income investments. However, it's crucial to note that private credit investments come with their own set of risks, such as liquidity concerns and the potential for default. So, what do you think? Should private credit be a part of 401k plans, or is it too risky for the average investor? Share your thoughts in the comments below. Alts firms on hiring drive to tap pensions, says stepstone-wealth-head. In a bold move that's shaking up the financial world, alternative investment firms are ramping up their hiring spree to tap into the vast pool of pension funds, according to the head of wealth management at Stepstone. This strategic shift is not just about filling seats. It's about transforming the landscape of investment management, and it's causing quite a stir. But here's where it gets controversial. Some experts argue that this could lead to a potential conflict of interest between the firms and their clients. What do you think? Are you a professional investor, diving deep into the intricate world of investments day in and day out? Or perhaps you're someone with a professional interest in the investment industry, working alongside or providing services to those who manage wealth for a living. Maybe you're a private investor, navigating the markets on your own terms. Whatever your role, we want to hear from you. Let's stay connected. Would you like to receive breaking news, in-depth analysis, and cutting-edge commentary from our award-winning team and leading voices in the industry? Or perhaps you're interested in the latest news and relevant content from our carefully selected CityWire partners? Share your preferences with us. And this is the part most people miss. The implications of this hiring drive go beyond the surface. It's not just about numbers. It's about the quality of talent, the alignment of interests, and the future of investment strategies. What are your thoughts on this? Do you see this as a positive move for the industry? Or are there potential downsides that we should be wary of? Share your insights in the comments below. Let's spark a conversation that matters.